Hi guys, Raj here with DND Trading, and I've got a really good interview for you guys today. So I've got Scott, who's one of our traders. Used to trade in an investment bank, so used to trade at Credit Suisse. So we should be able to get some brilliant insight around that. Plus, how he's just moved into the kind of professional retailing market in the equities that we have to offer. So how's it going, Scott? How are you?
I'm really good, Raj, and thanks very much for having me on.
No worries, no worries. So just first of all, because obviously, like I am acutely aware that I talk too much, and the viewers have obviously heard of me and they know everything about me. So let's start with you. So if you could, because you're going to be brand new to a lot of people, so if you could just give people the basics of how it all started, where you got to, and a bit of a background on your history.
Sure. So I left school in the late 80s, and what a lot of people did was not go to, say, a university. You joined the city as a career path. If you lived in fairly close proximity to London, which I do and I did, that was a pathway that was open to you back then. So I joined Barclays back in Jan of 1990, and then 7 years later we got sold to Credit Suisse, and then I stayed with Credit Suisse for the duration of my career until September 2023, when we sadly had the well publicized demise of the bank. So yeah, a long time. I've done pretty much every asset class bar fixed income in any depth, and I was very lucky to work around lots of different desks and had exposure to a few asset classes, but also the style of trading, the outlooks of your customers, which would always move with the actual instruments you're trading or the desk that you're on and their intentions. So yeah, I've had a really good broad background. Fairly deep, I think, if I say so myself, and I've really enjoyed it. And if I had the chance, I'd do it all again.
Yeah, no, definitely. Obviously, having conversations in the past that has come across. But what I find interesting about just that intro, and I'm going to pick a couple of points on it. But first of all, like a lot of people now have to go through university and get their masters, in some instances, PhDs and stuff like that. I mean, how did you find that evolution, like working through that system as that change was going on?
It was so I had my own challenges where, being from the East End of London, I'm not a true East Ender, but let's just say from the eastern part of London, you were basically starting into an industry where they started to get non-upper class individuals into the industry. That happened, with the end of the stock exchange, as you moved off the stock exchange floor into banks. So we're starting to get more open in their recruiting. But the environment of you're working with someone who used to work in the guards, serve the Queen Mother. He went to Eton, he went to Cambridge. But the thing about the markets is it's a great leveler.
Yeah.
And it's an exchange of information, and a market is an expression of opinion. So you don't think of it in the moment when you're talking to somebody. Of course, there are certain things which might sort of overawe you about certain individuals, but once you approach them, that's the beauty of the market. And then as the industry evolved, I actually went to, so when I worked for Barclays, I moved from straight sort of equity market making onto what they called the central risk desk at the time. So a lot more futures trading and hedging the overall risk of the firm. And then the firm had started to bring in some of the real kind of sharp mathematics students from Oxford and Cambridge. So they started to build a product around stat arb, mean reversion, high momentum, that kind of stuff. And they moved me across to go work with them, which then became the program trading desk, which then started offering. So the late 90s, you started to get more of a demand from the client base about this. And that's what really drives things in finance. It's a demand from your client base.
Yeah.
So if they want more products which are more quantitative and which are driven by those kind of factors, you respond to that, because if you don't, you'll be left behind.
Yeah, 100%. Yeah, so that's great, because obviously as the products were being made, you were there, so you got to see that firsthand, which is interesting, because obviously a lot of the products that we trade today that we have to train people on, you were there during the construction of
Yes,
those products. So it's a real nice grounding to even be able to explain that or understand the intrinsic value of a lot of these things. And some of them have no intrinsic value, do they? So
no,
yeah,
that's right. Absolutely
yeah.
right. Yeah, yeah. It's quite extraordinary when I think of some of the mechanisms that we used to use for trading.
Hmm.
And then once you start to get into the world of indices, futures products, and so on and so forth, and actually handling the expiry of these products uh, physically on the floor at life, instead of now you just kind of shove everything into an algorithm. So having to bridge the gap from the in-person trading, and it was actually, and mentioning life and the futures market, and for those who are listening who might not know what life is, it was the really noisy guys in the stripy jackets who would shout and scream all day.
Yeah.
So once their activity transitioned onto screen-based trading, you could then really control the aspects of the futures market and the cash
Yeah.
market, or the spot market, if you know FX in that respect.
Hmm.
Yeah, and that really drove a lot of the innovation. Once you got full control from something, and it's a level playing field, if you like. I think that was the biggest change from probably 96, 97 through to kind of 2000, was the transition from on screen for everything.
Yeah. So that's the interesting part. So like, were you on the live floor? Did you know a lot of the traders around there?
I knew a lot of the guys. I used to go down occasionally. One of the worst parts of my role was the fact that I had access onto the floor.
Yeah.
Our clients used to always send a junior in for spending a week on the floor, and they would always want to visit the futures trading floor on live, which, if you can try to picture it, I think it was about 12 soccer pitches, I think, at its
Yeah.
peak, including all the options. Lots of activity, lots of shouting and screaming, but let's just say there wasn't much observances around language, things which were said, and so on. So it could be quite hair-raising having to take a client who's straight out of university around the floor. But again, they all loved it. They absolutely loved it. And
Yeah.
there was an electricity, and everyone you meet who has worked in a face-to-face market always misses that electricity.
100%. Yeah. So I came on board in trading just as everything moved over to the electronic market online. So like, my age was the age of like the technological innovation of that. So I knew like the Clive Lamberts, Matt Sylvester, Louise
Yeah.
Clean, like all of these guys, from back then. But they would all tell me these stories and I wasn't there. So I used to get really annoyed about it.
Yeah, I think that they'll only tell you all the good ones. I think a lot of the time, like anything, it's like anything anecdotal. Once you look back upon it, you always remember a lot of the good stuff.
Yeah.
And certainly the efficiency, or how those markets became so efficient, certainly put London in a really strong position for quite a long time, which
Yeah.
it still is. But again, arguably, I mean, I guess that's a sort of another call entirely about the strength of London, then and now in finance. But because London was always happy to be fairly innovative, and of course, a lot of these exchanges, we still ape what happens in the US. So there was obviously movement there. But I think the fact London's always been flexible and open-minded, and the legislation it's had, which allows these kind of switches of style to happen quite quickly, is interesting. And yeah, I think it's like anything. If you have an encounter with loads of different people from loads of different firms all in one place, you're bound to get lots of different stories, and lots of characters and things you will remember for the rest of your life. And I've got a whole store of those, and that's been the best thing about the industry, and it still is.
Yeah, definitely. So then obviously moving on to kind of where your career trajectory took you, it was mainly equities that you were looking after, wasn't it? So
Yes.
what is it that kind of drew you to that, or what is it that you loved about that kind of took you away from the rest of them, having the experience in all of the others?
Well, I guess I'm happy to be open about this. So at Barclays, I did a year on the swaps desk.
Yeah.
And the swaps desk at the time at Barclays was the biggest in the industry by a country mile. And it was split into currencies for swaps, and then you had your FX desk. And I remember there was a gent, I won't mention his name, but he was the head of our UK desk, and I think he'd got a triple first in maths from Cambridge. And he said to me once after the close, we were sitting there having a chat, and I said to him, I've seen an opportunity in equities that I might go for. He said, yeah. He said, I know you're a bright guy, and you're good at maths, but I think you'll be far better served in equities, and you'll stand out there as opposed to sort of laboring away in a money market or a fixed income market, because they were just starting to get the guys over from sort of Harvard and Yale who had all the maths degrees and the triple maths degrees. And it was just a place that if I had tried to stay in there, I was highly numerate, but not in those guys' leagues. And that was the best thing I found in the industry. A lot of the time you get some of the best advice from the really senior guys, because it's like how they see the market.
Yeah.
They can see how you are and how you operate, how you would fit in with certain individuals or a group or a team or a market. And that sort of honesty, it can be a little brutal at times, but you have to take it as it's meant, which is in the best intentions. And it worked out extremely well for me.
Okay, you appreciated it then?
Yeah, 100%. 100%.
Good. So do you know, I kind of agree with that sentiment. So I worked on an EFX desk for a long time. And, you know, because everything's kind of shrouded in, like, you know, like they used to do all the chats on Bloomberg and all of that kind of stuff. And, you know, like we don't have an exchange like we do in equities and stuff like that. Like that unknown or that stuff, and the way that people used to arbitrage against each other's books and all of this kind of nonsense where nothing was really out in the open like it is in equities. It did make it a bit more, you know, difficult, if I'm honest. As soon as I moved over to stocks from trading FX, it made a big difference for me, 100%. And there's a lot more variables in that market, I would say, you know, like, because every day, I mean, I say this to a lot of retail traders. If you're trading euro dollar, for example, every day you've got euro buyers, you've got euro sellers, you've got dollar buyers, you've got dollar sellers. And then obviously the other currencies have impacts on these matters as well, like how the crosses interact with each other. Whereas in equities every day, you've got bullish sentiment, you've got bearish sentiment, right? Like the variables in the FX markets to do with rates, to do with, you know, the individual currencies, the political impacts, you know, the data. There's so much more that goes on there, I find.
Yeah, I think that if you see FX, people think that it's more simple because it's one country against another.
Yeah.
But as you say, how the other crosses are performing, it's like the spokes on a wheel.
Yeah.
And all these things are interlinked, or a clock face, or whichever analogy that you want. And you have to really understand the whole market, not just the thing that you're trading. And there's actually a young lad at my rugby club. He's attempted some of these FX trading challenges. Because he said to me with real conviction, he said, if you trade for yourself, it's the key to financial freedom. I'm thinking that's probably on the bottom of the website that you signed up to. But then asking him about, okay, so are you looking at macro? Are you looking at this, that, and the other? It's just, there's no training like that. And it's a very, I think everyone thinks it's unachievable to have the degree of knowledge of, say, someone at JP Morgan. But again, that's not the aim, right? You're just trying to understand it to the degree that you need to make money.
Correct. That's a very good point of where we lead on to, because obviously we train a lot of our traders, right? And I, from experience, you know, again, I'm not going to mention any names, but like I kind of, when I got to that point of speaking to the guys at JP Morgan, Goldman Sachs, you know, all these other banks, when I got to the point where they don't know as much as you think they know, or even though they've got the knowledge that they've got and the information they've got, there's still a whole lot of randomness out there that they can't quantify. You know, that was a big revelation.
It's very true. And certainly it's something that I've realized since leaving. You don't realize the degree to which you're institutionalized, insofar as you try to tell yourself that all the successes, and if you're honest, the failures are down to you. But the thing is, you are it's like being a really fervent soccer fan. If you work for JP Morgan or say Goldman Sachs, you know, a lot of the people who you meet there are actually obsessive, because it's literally from the minute you walk in the building, it's rammed down your throat. You know, you are at the best bank in the world. If you can't make money here, effectively, like, you're rubbish. But again, it's not taken into account, as you say, all the randomness. But again, what the benefit is of having that, having the comfort blanket of an institution around you, is that if you need to know something, there's always someone you can ask. Yeah. And because they work for the same company, you would hope that it's a well-intentioned answer, and it's there to help you. But then once you come out of that environment, you you obviously realize, I mean, I myself, I look at the markets this afternoon, which, you know, maybe we'll touch on. And even though you could argue some of the price action and how it might look to pan out and how it might be over the day, at the end of the day, it's just price.
Yeah.
Why it's doing it is something you could spend the next week debating, but it's just a price.
Yeah, and you still might never come up with the right answer, right? You don't.
100%.
Yeah. So having said that, obviously, did you keep contacts? Did you talk to people at other banks? Like, because obviously friends move around and, people go here and there and all kinds of stuff. How was it quite open back then?
It was. You would normally maintain. I mean, I got quite bad at networking because I was so happy at Credit Suisse. A lot of the time, if you're networking with someone from the opposition, unless it's a friend that you have outside of the industry, so let's say a social friend from locally or through sport or some kind of shared interest, of which I have a lot of those, but you generally push yourself to socialize with a lot of guys at other banks because you're always looking to place yourself on the jobs market. And I just find what those conversations do. And I've met people who I thought I wouldn't like, and they were absolutely great, and I still talk to them now. But for the bulk of it, say in the late 90s and up to the, say 2004, 5, 6, when the markets were exuberant and everyone was making money and everyone who you spoke to on a night out or who you bumped into was amazing, they're the best trader in the world and whatever. So you do have to get quite used to listening to the constant sort of, self-sales talk, because a lot of the time that's why you would really interact with other people. I mean, look, you could go to, I'm sure it's much the case now, if you go up to Mayfair on a Thursday night, if you head in the punch bowl and you'll meet the guys from all the hedge funds and they've all got the same book because they all talk to each other every single day and they're all on the same models. And then after there, you go somewhere else and they're all in there again. So, it's easy to tap into it. And it can be fun and enjoyable. But I've really valued the kind of a person that someone is, not what they tell me they are, if that makes sense.
Yeah, no, 100%. Yeah, I completely agree with that. I think that's why openness and, honesty when it comes to trading in this side of the market is different. Obviously, having been in both now, they're difficult to navigate for different reasons, egos, opinions on one side, but then how good is your performance on the other. Like it is always really that, isn't it, wherever you end up going. So then your actual role then at Credit Suisse and what you were doing there, so there's always an element of market making. Obviously you have huge customers there on equities desks there. I know that were very prominent. And then how about in terms of your own risk as well? What was the balance? How did that work out?
So the thing that you generally do through, say, the stages of your career, let's say that there are 3 stages, and someone once said to me, learning to trade is like learning to drive a car. Once you master the controls, you can focus on the road ahead. So you go through those kind of stages where you're mastering the controls, as it were, and you're just making sure that you're not making the silly mistakes and the operational side of the desk. And it's all about the accuracy, as we know, right? If you're not accurate in how you draw a trend line, if you're not accurate in how you enter the market, if you're not accurate on a stop or a strategy, it won't work. And it's the same there. You kind of slowly prove yourself with even things like accuracy about how you mark your books at the end of the day. It's all about the franchise. Then let's just say on level 2, and you become a mid-level player, if you like, you're then expected to start to explore opportunities outside of the flow from the customers and market making to express your opinion on the market. And again, the reason that traders work in a team is to share those opinions. And that's why I love the format of the things you guys do when you have the chat room up and everyone's kind of nice and honest. But then you try to have a collaborative approach to, say, outcomes or a catalyst or that kind of stuff. Because what you can do is, if you prove to be successful on those instances and the money that you make, and all your clients know that you have a back book and you have a client book and you have a market making book, and you have to be open about that from the start. But what you do is then is you add to your franchise, because if you're looking at a catalyst or an event in the right way where you make money from it, it means you're looking at it the right way. So that becomes an extra arm of your franchise, where you're saying to customers, look, this is what we're looking at. It's worked in the past. Or if I was a salesperson, I'd say, look, we've got 3 traders on our desk. They're really super strong at macro or micro or earnings or whatever it is. And that's the extra leg of your franchise. And you find what suits you. I think from my formative years on the program trading desk, because you do so much on macro, because you're handling thousands, if not hundreds of thousands of orders a day, you're just trying to make sure it's like an ocean liner, make sure it's kind of sailing the right direction. And and then if you become in the upper echelon of sort of level 2, then you move into level 3, which is actually managing a desk. So you then become as much of a franchise lead as a mentor and a coach, and you're looking after other traders. So you're kind of middle section, if you like, where you start to flourish. You can often make the most or the larger gains in your career. Yeah. And you can make the jumps in some of the compensation, which you hear stories about and so on, because if you're successful, that's what you're paid upon. So then you get to level 3, if you like, where you're still on a desk and you're managing a franchise. So it's slightly like a bell curve, where you probably have more individual responsibility for risk and the franchise in the middle section of your career. And then if you're at the top, if you like, at a management role when you're managing other traders, the actual amount of the risk is obviously at its highest, but it's, split between other traders who work for you. Yeah, of course. Managing them and the risk overall, rather than sort of individually looking at situations, I guess is the best way I can explain it.
Yeah. So then during that time in the management, I mean, obviously you would have had some crazy stories. You don't have to get into specifics, but like obviously there were big market crashes, flash crashes, all kinds of stuff. Obviously we had the Dow flash crash, we had the 2000 dot-com bubble, all of this kind of stuff, the financial crisis. I mean, what was I suppose we'll go for both sides. What were the most outstanding, I suppose, good or bad experiences from that point of view?
So the good was when it's like someone said to me once, if things are going well, being a trader is the best job in the world. If they're not, it's the worst. And when you're just in a team that you're happy with and you're seeing the market and your clients are happy, because you have to come in every day and nobody walks in and thinks, if I can make 30 grand this morning, I'll have a huge bonus at the end of the year, because it's a marathon. So it's just that feeling when you're probably on the program trading desk, where we started as a team of 4 in London and we grew to a global product with about 80 people globally, where I think we went from number 15 to number 1 in the rankings, and you're building a business. And that's real satisfaction for anyone who owns a business in any walk of life. That's the satisfaction. Yeah. Is once you reach a stage whereby you have a happy team, things are going well, and you're respected. I think that is the great. I mean, individual trades are, as you said yourself, it's always a degree of luck, right? And the statistical outcomes of these things are, as much as I'd like to tell you it was all me, but I think for the worst, well, I get, so when we were building up the PT desk, there were times when you'd work, say, an 18 to 20 hour day, but you didn't mind doing it because you were building your business. Yeah. And that's like any entrepreneur. And I know it sounds a bit silly thinking of yourself as an entrepreneur in a big bank, but if you can build a team from 4 to 80 in the space of 3 years, that's, I guess, the closest you'll come to it. Yeah. But all the bad stuff, not say bad trades particularly, but say bad events. So as you say, if it's .com, 9/11, 7/7, flash crash, 08, at the time we had some great managers, and they just said, we do not want you to trade, right? Don't try and trade. Just look after your customers, because they're experiencing a lot more pain than you are. Yeah. Because their performance. So just be consistent, be there for your customers. Yeah. And just do not touch the market, because even if you made money on 9/11, everyone's going to hate you for it. Of course, yeah, that's quite nice. Normally people don't look at traders in a bank and think that somebody would say that to them. So it's nice to hear that there was a lot of empathy around that time, because I knew traders that made money then. Listen, absolutely, yeah, and that was always the thing. It was a case of whenever anything happened bad, it's either a global significance. Well, I guess, so is a market crash. But yeah, no matter what it was hammered into you. You're there for your customers first, because they come back to us the next day and the day after and the day after.
Yeah, wow. Okay, so now there's going to be a lot of retail traders or professional retail traders looking at this. So like we trade, you know how we trade. We're basically probability based kind of, we trade setups, right? So like every single day we're looking for a type of setup, and we're going to be snipers and trigger that. Obviously on your end, on the institutional level, it's a little bit different. I mean, did you have traders that would trade that way? Did you have traders that were purely flow based? What were the things that you saw over time?
It's certainly very much, and as I said to you, I spoke to James the other day, where the mantra that I have to get out of is what I see, not what I think. And so the thing is, because you're constantly marketing your franchise, your firm's macro view, your market view, whatever, you can't but have an opinion before you come into work.
Of course.
So you generally trade around that opinion because you're expected to. You're not supposed to come in and say to your boss, I've looked at the 5-minute chart for an hour and I think the market's going up, because it is a game of egos, right?
Yeah, it is.
In a big bank. So excuse me. So definitely the ability to have a belief and to maintain that was extremely key. And again, because you have the benefit of your customer flows and so on and so forth, there's a certain informational edge there. That's certainly become less and less. But yeah, the expectation was, and it's a very simple market-based, structure. If you own a market stall and you sell soap and no one wants your soap, then okay, you need to kind of switch into something else. It's a fairly simple market structure. So you're trying to, I think in a bigger bank, you're trying to anticipate a couple of days out, rather than focusing what's happening in the next 15 minutes, because you get it's like the flashing light syndrome, and everyone used to love, and you used to get loads of visitors on the trade floor and they'd love the flashing screens and the lines and your phone board lighting up like a Christmas tree. But that's what you have to get through and beyond.
Yeah, and that's the allure, isn't it?
Yeah, exactly. And you can say it, if you're looking at Nvidia now, right? You can look at it and go, it's exciting that it's moving. But me personally, if I was actually still at a bank, I would not be trying to trade that at all today.
Yeah.
Because you've got no idea what's going on. You can't possibly have an informational edge. Whereas that's what you're trying to get to, is have enough of the market flow that you have a degree of informational edge, but not so much of it whereby you can become submerged in only handling that, and you can't kind of look to take a time out from that and look at, say, a research piece or some analysis on technicals and that kind of thing. So yeah, you're trying to trade more what you think, really.
Good. So I know you had Louise, Neddy, and Stephen there, like doing the technical analysis stuff and all of that at the time. That I used to know them when you used to work there, so I used to get their reports and read them and stuff. How much of those type of technical reports, plus the macro stuff that used to come from the economists and all that, what was the kind of split? Like, how did you guys take on board that information?
It was not very well aligned.
No,
because banks.
Oh, I asked the question.
Banks love to be banks love a silo.
Yeah,
they love to be in a silo. Now, if I go back to say, it took me a long time not to be scornful of charts, because again, that's the people I worked with. So I remember a guy. So we first got a Reuters screen on the desks back in about 1993 or something, and they had simple moving averages on there and a graph of the price, and you could kind of stick your stock in, and that was the extent of it. It was a news feed and a very kind of simple screen with the moving averages on it. And so you're trying to teach a guy who's come from the stock exchange floor, who's probably 50, he was my boss, who spent his whole career on face-to-face trading, and his response was, what a load of rubbish, even the Titanic had a chart room, right? Which was his view on it. And of course that tends to color your opinion. And it's all about the vendors who are offering you this information. And so we went for a long time just looking at prices, and you're looking at a market price and so on and so forth. And so if I could go back, not only to kind of, I think silos are fine, how you maintain them, because that's what people are motivated by, is for how their team do, what their profit looks like, what their impact with clients is. But you could have definitely had a far better bridge between it. And I definitely noticed on the times I used to go and sit with our guys on fixed income, particularly FX, they used to look at charts like the Holy Grail. I mean, it was not the be all and end all, but that's the thing with FX, it will behave really well to charts, perhaps more so than equities. I don't actually know the stats, but I think certainly in those days, before you had a lot more external factors affecting the market, you could definitely trade and make money off FX using the charts and with the macro view from your guy. And something they did actually in the latter days at CS, they actually had analysts on the desk. You would have someone who worked in, say our strategy group upstairs, and they would want to be a bit more involved with the business. So they would then actually look to make a choice and actually sit on the trading desk. So if news were to break, or if you had like a huddle for traders in the morning, and you would have your macro research guy in the middle of that huddle, saying his piece. And if it's a Monday morning, he'd be saying, look, not a lot from me, but on Thursday you've got such and such and such and such.
Yeah, and we do the same thing.
Yeah, exactly the same as we do, right? And so if something were to break, instead of me looking at a Bloomberg headline and attempting to scribble on a piece of paper and make a drawing with about 3 arrows on about what it might mean, you've got somebody who can stand up and say, listen, here's my first reaction. If you give me 5 minutes, I'll call the guys upstairs, or I'll speak to guys in Moscow or wherever it was. I'll come back with a better view on it. So we had some of our guys, in fact, a guy who worked for us, he used to work for Reuters in Moscow, moved into politics, and then he came to work for Credit Suisse. He had a call with clients 3 days before the Russian invasion of Ukraine, and he said, I think he's going to do it.
Wow.
But so few people believed he would do it, even after what he said. So few people believed he would do it. It was not ignored. It was like, wow, okay, that's a strong view.
Yeah, of course, it's out of the norm.
So actually having somebody who can communicate on several levels while having that knowledge base is I think is really key. And I think I was actually thinking about some of this afternoon. I think if they had, I was very lucky. I moved around several desks, but I definitely think that the firms could have offered you better training and more if they'd understood what the strengths of having 3 analysts on the desk who look at the technicals, who can trade, but actually look at the technicals. And if they'd said, right, okay, we've got 3 slots on the training this year at the STA, who's interested?
Yeah, it's funny because, I would probably, if I can go through the years now, getting all blurry, I'd probably say 2015, 17, 18 onwards. From that time, I actually had central bankers come and learn, and guys from all of the top investment banks. I'd probably say the only one I didn't have was Goldman Sachs, but they had an in-house training person there anyway. So like literally they all were coming, but it was on the trader had to show an interest. It was on the back of the trader. They would fund it. They would say, yeah, go and go do some sessions or whatever. Like now I've got an LME trader. I've got some other traders from some other top tier places, mainly commodities firms. So there are other pockets of the world of our sector where, let's say in oil and gas, or in electric, like power and all this kind of stuff. There are other companies that are now taking this on board, and I think people are starting to see it. But there's a lot of misinformation about technical analysis anyway, right? So
of course, yeah.
That's I think where, same with fundamental analysis, but that's kind of where this misconception comes from. So I mean, from that perspective, then you've been inside our chat rooms, you've seen what we do, you know everything about us, obviously being one of the traders and stuff. So what is it, how is it that you would kind of describe that move? Because we are, what I would describe as professional retail traders rather than being institutional traders. Yes, DND capital, we capitalize traders, but it's a bit different. So how would you, what would you say about that?
So I think that from having attended a lot of the events in the last year or so, this is something I've been thinking about, but having been so happy within a team for so long, the thought of actually sitting in my spare room and trading on my own was just not going to happen.
Yeah.
So I started to go to some of the industry events, and I think we mentioned that the one that's sort of this time of year at the Novotel in Hammersmith, or whichever one it is, I lose track of the names of them. I saw your guys, and unfortunately I got waylaid speaking to a couple of people who you used to work with and for, and I hadn't managed to get around to you guys. But then, having met lots of other people and lots of other vendors, if you like, at these events, in all honesty, a lot of them, with the greatest respect to what they're trying to do, but from a personal perspective, they either made my skin crawl or my blood boil. Just because of, I can see it's like the Wizard of Oz thing. I can see behind the curtain.
Yeah,
I think. And from meeting you and having the opportunity to sit down and just like see how you guys operate, like actually having the in-person sessions and meeting each other, and you could say to people, look, if you want to work with someone else in the group, you can do that. And you have to demystify it, because there's no point you sitting there saying, I used to do this and this, and you do exactly what I tell you to do. So it's the honesty, and you get a real sense of integrity, and you're just actually relaxed about it. You're not attempting to portray a particular image.
Yeah.
Right? You're someone who strikes me as, your whole selling point is, this is me and this is what you get. If that suits you, then great. And it's the same as the setup here. If that suits you and that kind of shtick, if you like, and the style it's done, it's if that suits you, great. If you're looking for a bunch of guys who used to work in a bank who just say, listen, you just leave your money with me, if that's what floats your boat, then you go for it. I'm not to say none of this works, but for me personally, it was all about who I'm going to be spending my time with, either virtually or in person.
Yeah.
And is this an organization or a group of people who I would want to share my knowledge with, if it's useful or if it can be helpful? And that's been a lot of my journey over the last year, really. And listen, there's so many well-meaning people out there, but either they operate the wrong way, or the platform is wrong, or they overcomplicate things, or whatever it is. And simplicity is key.
Yeah. I think, if I've worked, because obviously coming through institutional, going to, on the other side of being in the retail side, I found that, like, the honesty side of things in terms of the trading results, the trading history, having a live chat room, having the meetup days and all of that kind of stuff, like, no trader is imperfect. I mean, I'm lucky enough to, sat on some of the best trading desks in the world and talking to some of these guys, and no one gets it right all of the time, but there is a common misconception that if you're working in one of these places, that you're going to be the best. So obviously, I always say to all of the staff at DND is, like, trading comes first. If we don't trade, if we don't make money trading, what have we got? What have we got? We can't talk to all of our customers and say, look, follow us and our trades, but not put our money where our mouth is, and kind of show we're doing what we're saying, practicing what we preach. Yeah,
100%. It's like if you're a football coach and you've never played football, you can coach, but you're going to have a tough job making it realistic and actually tangible. I think that's the thing. You can see the experience. And listen, everyone's from a lot of different backgrounds, has a different approach, but you can see that their enjoyment of it, but their experience of it is tangible.
Yeah, that's the thing. I think, like with James, like you mentioned earlier, and Felicia, like, having seen these traders trade live and how they handle themselves in markets and see what they do, that's when if they're going to be good coaches or good traders. It's very difficult otherwise to know that, if it's just somebody you plucked out of thin air. But if the traders choose them as a coach, they can see how they are, how they act, what they do, like yourself.
Yeah, absolutely. Yeah. And I think because you got such a range of personalities, I would hope that if you're looking at things like a Venn diagram, I would hope for most of the people that you have, those circles will connect somewhere with somebody.
Yeah, they give me a headache. That's where they connect. You got Raj's headache in the middle.
Oh, I couldn't speak to that, but yeah, I'll take your word for it.
Yeah. So then, obviously, moving forward in the chat room, obviously, you coming to the events, because it was really nice when you came to the coffee morning as well, and you got to meet some of the other traders that aren't as active in the chat room and stuff. They get to ask questions and all that. Like, it was nice. So it was a good experience. I hope you enjoyed that experience as
I
well.
really did, actually. I really did. It made me realize that of the conceptions of the market. But I thought it was interesting. I can't remember their names, unfortunately. So if they're listening to this, then I apologize. But there were 3 of the traders there, and they have a little Sunday meeting at their house at a mutually convenient location. And that's great, and that's absolutely great, because if you can speak out, and as I mentioned earlier on in this conversation, that's why traders work in teams, because it's almost, if you think out loud, when you trust the people you work with, they'll just highlight and go, well, okay, for part of that, I agree, but I don't agree with this for this particular reason. And that's the point of it, because trading can be really, really lonely. Even in a team, you can be locked in your own head, and you just need an outlet to say, look, I'm having a bad time. I saw on the chat earlier, someone mentioned about a losing run, and the fact that you've got people who are happy to say that out loud shows it's the right platform for them.
Oh, that's the biggest thing for me. We always say that don't suffer in silence. Like, everybody has losing runs, 3 times last year, over the last 16, 17 months, I had 8 losing trades in a row 3 times, but I also had 9 winning trades in a row, like getting overcoming these and seeing that the mental strength it takes, the calmness, the composure it takes to get over these winning and losing streaks is part and parcel. You can't expect to be a good trader and think that it's always going to go swimmingly all of the time, So it's good to see that life. Yeah. And they go through winning streaks, they go through losing streaks like everybody else, It's just one of those things. So now moving on to back to the markets then. Obviously we've got Trump back and all this kind of stuff, and obviously China now with their AI platforms, and there's a few, are we going to go back to tariff wars, trade wars? What are your thoughts on what's going on at the moment then?
Well, I think someone actually explained it far better than I, which I read recently. He made the point that I think the markets are have rallied almost 100% from when he was last in office or something like that.
Yeah.
So they used the phrase that up at this altitude, the air's a lot more rarefied. So the market not be quite so tolerant of some of his aberrations, or some of the things he may say or do. I think I do think that the US is in such an incredible spot right now, because and this is no accident, right? So they've made themselves energy self-sufficient. They've got a big internal market. They've got control, and they've always had an administration that is in support of the economy, and the banks think or say exactly what you like about sort of investment banks and whatever, but they are a monetary economy, and they know that the best way to keep people happy is to let them make money, and for them to provide a vehicle to do that. I think that the market could certainly do with a little bit of a pullback and the consolidation, but I think what's quite interesting is that from how the market is played at the moment, and the rise of index funds and so on and so forth. So you say to somebody, oh, own an SPY as a tracker, and you just have your money in that, and that's it. And everyone thinks it's a really sort of a boring instrument. But in actual fact, you have 40% of your money in the Mag 7 or whatever it is, so it's actually not a passive tracker at all. It's actually an active fund. And so I think that's what's interesting with the market, where we've probably ignored China for a while, because economically they've been so weak because of the policies. But at the end of the day, they're reminding us that they have a knowledge bank of incredibly smart people, incredibly cheap labor, and they're coming after you. I read a thing this morning, actually. It's as if they turned around this morning and said, hey, I've made an iPhone for $3.
Yeah.
And I'll sell it at $4. Right. Yeah. So it's seismic, and you see these things, and the positioning, and how the market reacts. You can just see the concentration of the positioning. It's frightening. But again, if you actually look statistically, the S&P over the last, I think, 40 years or something has always had 8 to 10 stocks driving it.
Yeah.
It just happens that the 8 to 10 stocks that are driving it now, I don't have AI in my hand. I know it's an app on my phone, but I understand how Apple is so strong because I have an iPhone, I have earphones, I have a MacBook, a iPad.
Yeah.
I can understand how Amazon or Microsoft or whoever it is are so strong and making so much money, arguably, if it's fair or not. But yeah, some of these AI stocks or the AI spend has now been called into question. And I think that for your students and for guys on the platform, that these are really interesting times whereby you see how the market is now structured and the traditional nature in which, so you'll see someone like a large institution won't suddenly sell Nvidia now, obviously, but because of the fact of what the price action is happening, if you run loads of index funds, if you're a large index firm, I'm sure you could think of a few, and I mean you could name a few. All of a sudden now your performance is actually materially underweight or underperforming because of this price action. So how the market reacts, and I'd be really interested to see actually if we had access for the data. Let's say Nvidia for today, perfect example. So you had the falling knife at the open. It had a little rally, but now it's setting through. I'm looking at it here on TradingView. It's set now into a pretty solid trend lower, which is probably someone shoved a few orders in a VWAP algo. So it's quite.
I want to bring it up on here so everybody can see it as well.
So it's quite interesting. A way to add the volume on the graph at the bottom there, Raj, as well.
Yeah, there definitely is. 1 minute. So let's get the video there. And let's do you want it on the 5 minute?
Yeah, I'm looking at the 5, the hour, and the day. I think the 5 minutes fine for today, actually, for our purposes. And then if you have the volume.
There we go. There's the volume.
There we go.
Perfect.
Yeah, so you can see that. You can see all the volume at the open is massive.
Yeah.
Which is probably options guys as well. They'll have open options positions in it. Because I would imagine a lot of people are expressing a view with a week or two ahead of earnings in options. So some long, some short. I would imagine at the margin, most probably long. I would think so. You got that massive volume spike, and then you have the slow sort of a petering out. But now the volume starts to pick up again as the VWAP algo starts increasing volume throughout the day. And you'll see that volume start to pick up again into the close, and it'll be interesting to see what the price action is. So
it's interesting. The second highest area of volume is that move down, isn't it? Like of the day.
This is it, and this is where you can see how algos are starting to kick in, because there are a few guys out there looking to buy stock. And that's what the volume spikes are. But again, several algos are just forcing that through, but which are prompting those higher prices. And again, I don't know if that is it looking at the daily. That's a bit of a support level there where the price action is now, which is probably why the volume's picked up a bit. You can see it's a reasonable sort of level around this sort of price action here. What's that? Where are we? 119, 120. There's quite a cluster of levels around there from sort of September time. So I would imagine that's why you're seeing a bit of volume around there, and it's interesting. So it's having that price action as the continued drop, but it will probably be as much as anything hedging. A little bit of an unwind, which is why you could see in a couple of days a fairly sharp reversal, because you're getting bigger vacuums in the price nowadays than you ever were, because funds are just not that active intraday anymore.
Exactly. I mean, like, even if we just start up, where SPY is, etc., and have a look, it's not the same, like you can see that was a single stock kind of was very heavy on that. Look, QQQ, and all the others, they it obviously it's going to threaten Nvidia the most, but definitely it's the market breadth, or watching those individual stocks that are held within those funds. People might start to rebalance those funds a little bit more as well now, So
this is it. I mean, a lot of the guys who have the mandate for a real sort of rebalance would largely be, as I say, I would love to see the split in volume on the day of retail versus institutional. I think in the US it's 40% probably. I think in a day, something like that. I'll be really interested to see what the sum total of that volume split looks like.
Yeah, so back in the day, we used to do this thing where we used to track like the outside days were normally done by the bigger funds. The inside days were more the locals or the traders who
Yeah,
were less institution, you know.
yeah,
So it's normally that like when you get a big outside day or a big move outside, you get all that flow in. You can definitely tell. So it does look like there are some people liquidating there, especially in the video. So it will be interesting to watch over the coming days.
yeah, absolutely. Yeah, and that's the good thing about markets, and that's why I love them, because there's always something to talk about.
Yeah, 100%. So then, like moving forward, then, like obviously you're getting a lot more involved in our community and stuff as well. I know you got a few bits on the go outside. The markets are still interesting you. They're still exciting you after all this time.
Always, always. I think it's. I think if you've really experienced them, I can see why a lot of people might try the markets and then hate them and just say, "I'm never touching them again."
Yeah.
But once you realise that the market is not personal, it just is.
Yeah.
It's not against you. And I've made some bad decisions in the last year or two. I've had far too much of my money in money market funds because I thought that the market was too high. And that's what I mean about think versus, see. And so, and it's a conundrum which sort of refreshes daily.
Yeah.
So if like start having a Rubik's cube that resets every day and you got to keep trying to solve it,
Yeah, I do like that analogy because obviously we have obviously long-term trades, swing trades, but we're predominantly day traders, especially in the afternoon. So yeah, we just take the information every single day and just roll with it on every single day and work it out every single day and catch our statistics.
Yeah, absolutely. And as I always used to say to clients, if you used to have a youngster on, used to show them a VWAP curve, how the volume trades throughout the day.
Yeah.
And so you would ask them, how come there's a spike at 2:30? And they'd sort of look at you like you're a crazy person. You say, look, it's the US Open, and then it slowly builds, throughout the day. Because if you were a European trader from, say, 2:30 to 4:30, that is the window where the market is at its most informed that particular day.
Yeah.
Now, again, here, if it was me personally, if I had active open positions, I would be sort of having a look at this every couple of hours, because I spoke to a friend of mine actually earlier on. He holds Nvidia, and we were arguing about from the price action earlier on. I said, look, it might be time to spend a little bit of money if you want to, because it's had a drop. But I said, if you look at, say, between now and the numbers, you've got maybe 4 opportunities. You can spend a little bit of money, split it into 4, and you piece it in. But now looking at the price action, I actually said to him about 3 o'clock, I said, I don't like how it's having another kind of second wind down, so let's leave that and then watch again. And that's a friend of mine who's a sports teacher at a private school, and he just loves this stuff. And that's the thing about the markets, right? I'm not saying I'm right or wrong, but it's that ability to sort of have a quick glance at something and you can make a decision reasonably quickly.
Yeah, and that brings me on to another point, because that what you just said there was interesting, because coming from a place where you mentioned the word egos before, and obviously we do a lot of work on our kind of performance psychology and trading psychology anyway. How do you see that in terms of was there any help there in an institution in regards to that, or like how have you seen that now, and also being in the markets for so long, did it get stronger as time went on?
To be sincere, if anything, having an ego was encouraged. And probably so let's say, for argument's sake, the conversation I used to have a lot with people, they would say, look, you've worked in the industry a long time. How come you're still a director and not an MD? Because I would refuse to play the games that would see me enter that particular club, and then the games you have to play subsequently for being in it. Because I'm very self-deprecating, although if you ask my family, I have a huge ego. So I guess it all depends if you perceive yourself. I mean, I'm not a psychology student, so I don't know if your perception of self is the same of others. But I just really enjoyed the people. In fact, I was speaking to someone the other day, and they said, "Oh, what was your favourite thing about all your years in industry?" I said, "It was actually the people." I said, "I could sit here and go, oh, it was this trade and that trade, and I did this and I did that." But I hate to talk in the "I did this" sort of format. If someone asked me, I'd love to tell them and share things, but I was always much more a team sort of person. I guess being from a sport like rugby, where the emphasis is so much on the team, and that's the sport that suited my personality, and that's what I've really held through. But generally in a bank, the most successful ones are the sociopaths or the egotists or so on, who can simply leave behind. And look, if you work at a particular level of seniority, you can't think and look at the world the same way as ordinary people, if you like.
Yeah, I mean that's true. Yeah, it's a different discipline. But then very so often you get the Kevals, the Adebolis, all of these guys that do it. That your ego keeps you and traps you in a trade, or things like that.
Well, so the thing is, normally though, it's not them in isolation, because the firm or the people that they work for are complicit. For instance, for our mate Kweku, as soon as you brought him up, I remember there was a guy who worked for us on our algorithmic desk. He was at UBS, and the algorithmic team at UBS sat in a sort of raised area above the trading floor. Yeah. It was almost like an atrium, if you like, if you can visualize that kind of thing. And he said he sat, he could see Kweku in his sights, if you like.
Yeah.
And he worked for a French guy who at the end of every day would say, hey, have you much? He goes, hey, I made sort of, $3 today, i.e. $3 million. And the guy would stand with his hands on Kweku's shoulders going, everyone should be doing this.
Yeah.
Right.
That's the ego feeding there.
It is. But again, at the end of the day, how the pay cascades upwards.
Yeah.
You're a manager of a franchise. If you have traders, if all your traders make $100 million and they get 5% of that as a bonus, I know that might sound obscene for people. You get some of that. So each of your individual traders, if they make $100 million each, will get $5 million. But you as a manager will probably get $15 million. So the incentive is there, and the structure is always incentivized to encourage high performers, but they're generally encouraged in the wrong way. So
yeah, this is what I was about to say. Yeah, I feel obviously I've seen it, but then for me, the markets will always humble you one way or another. When you feel like you're at the height of your superpowers and you can't get anything wrong, it will go wrong.
It's just, for too many people, it's a game. And the problem is, I recently read Meltdown, which is the story of Credit Suisse.
Yeah.
And again, far too much of it I can still remember in the first person anyway. But the problem is that when you get people, once they achieve a certain amount of net worth, things become a game.
Yeah.
Right. And if it becomes a game, it then becomes a political game, or you use an investment bank as a platform to. And this is not an anti-IB or an anti the industry or anything like that. It's simply my experiences. And so there should be higher penalties, or a higher clawback of your money, or your money is held in escrow for a certain amount of time. And some people might say, oh, who would ever want to be CEO of a bank? For that money, there'd be plenty of people who want to be CEO of a bank. And I just think, and if you look at Lehman's, Richard Fuld, I often say to people, if they ask me, so what's all this about in the industry? And after the crash in 2008, was there repercussions and so on? I said, well, he was worth, I think, 370 million before Lehman went under, and he's still worth 370 million and hasn't spent a day in prison.
Yeah.
And again, and this is not me attacking individuals in an industry that was great to me and the best experience of my life. But yeah, the way that people are, no one likes to question. In fact, my first boss, he always said to me, he said, no one likes the truth tablets.
Yeah.
Either to hand them out or to take them.
Yeah. It's strange, isn't it? Because as a professional trader, as an individual, accountability and, the humility of this job, there's no way you can do it without that if you're a retail trader, right?
No, absolutely.
Because you can't hide. There's nowhere to hide. It's your P&L. You eat what you kill, right? So if you've got your head in the sand, it's not going to work.
Yeah, absolutely. And I think I feel a bit sorry for the generation who are trading now, because so much of the emphasis is on algorithms, and if you're a trader nowadays, if you look at most trading jobs, you have to have a major in computer science. So that's not even trading. That's just a sort of a numbers game, So I do feel sorry for the future of the industry, in a way that you'll never get necessarily that thrill of the chase, if you like, and watching the markets. But again, maybe markets are more stable now thanks to algorithms or so on and so forth. I mean, look, maybe they are, maybe they're not. Again, that's another that's a whole nother episode if you want to get into
Yeah.
that. But yeah, it's I think generally managers are always looking for the star.
Yeah.
And I guess, and this is not an anti-soccer rant, but it's the case of, I think nowadays, you know, football has got a lot more moderate in the behaviour of the individuals. But let's just say, you know, 15 years ago, and as an ex-footballer yourself, Raj, you may disagree or agree, but when the real money started flooding in, some of the stars were treated almost like as if they were their own species.
Yeah.
And at certain clubs, like say Manchester United, and that's what I used to call CS, as the Man United as the city, a once great franchise. You know, once those franchises are broken and the cult of the personality or the cult of the player becomes unchecked, it's very difficult to get that particular genie back in the box.
Yeah, it is. I mean, like, because D&D, we still appreciate the human element, but we're systematic traders, really. So,
Yeah,
you know, that's why, like, obviously, I've helped people in the city with algos and moving things over to algos, you know, and it did feel a bit soulless. So now, the way we do things, like, we don't want humans to leave trading. You know, that's it's part of us. You know,
absolutely.
like,
Yeah,
yeah,
absolutely.
it's a very interesting thought. But yeah, so for anyone who is new to yourself, and you know what you know, what bits of advice would you give, or you know what would you say to any new trader or any retail trader that wants to turn a corner or anything like that? What would you say to them now?
I think if you try to find a source that you trust and who resonates with you, and if you need somebody to speak to that you can ask a question of or not feel silly. So it was a phrase in our industry years ago, is everyone needs a rabbi.
Yeah.
So someone who's trusted, or a priest, or whatever you want to call it. And so if you just have someone who, if you're having a bad time, if you don't feel like you can open up on the chat, or if you can open up on some other medium, and you can actually have a partner. But I think you have to try and understand yourself.
Yeah.
And what your goals are, because if you don't understand yourself, you can end up actually seeking the wrong information or the wrong help rather than the right. So you got to try to understand yourself, what your motivations are, what you respond to, and and then I'm sure in the scores of people that you've got in the organisation there, and it's not, and not only you guys, everyone else. I say at the coffee morning, I met some really good people at the coffee morning, and maybe on the in-person day this Friday, might be a few people there who might really, really love a Sunday sit down with people and are happy to drive an hour to go do it, or just have that kind of a connection with people and that kind of shared load.
Yeah.
But I think if you understand yourself, then you can understand how you look at markets, I think, a bit better.
Yeah, definitely. That is the self-acceptance part of trading. The best traders I know are unapologetically themselves.
Yes.
That's genuine. That's genuinely it.
Yeah.
And I wasn't there for a long time. So to anybody that's watching this or listening to this, it's a journey, right? Like, some people struggle with it. Some people just are themselves straight away. You know, you just
absolutely. I think I would say for somebody who wants to try it, as I always used to say to any of the grads or interns who used to come through our processes, or any that I used to meet, if you hate it, don't feel bad. It's just not for you. And if it's not for you, you can torture yourself for years trying to learn something which you're just not suited to. Again, how you operate, and you asked me earlier on what attracted me to the platform. The fact that you have the blend of the human and the statistic is about the best hybrid opportunity you're going to get, because you have the systematic, which means you have to be rules based and you don't deviate.
Yeah.
And the human aspect is the humanity of you guys and your approachability. But sometimes you just don't like it. And don't feel bad.
Yeah, agreed.
You don't like it, don't feel bad.
Agreed. Yeah. So when everybody joins, we do the personality assessment and the risk assessment for everyone that joins. So yeah, we do get a good feel and then chatting. And you know, the saying is, it's like the hardest way to make an easy living, isn't it? A lot of people say that.
Oh, of course, yeah. Yeah, of course.
So,
Like I did you earlier on about my friend's son, and he's obviously has the tagline kind of, you know, strapped to his head of, you know, if you trade, it's the key to financial freedom. And it is, but it can be the most horrendous. Start saying if you climb Everest, it's a great view, but it's flipping hard to get there.
Yeah, 100%. Yeah, no, thanks for that, Scott. We've got some great insight in this podcast. I think a lot of people would absolutely love to listen to this. So thank you for doing that. And I'm going to see you on Friday anyway. So we'll
Yes,
have
look forward to it.
a good few drinks then. But no, thanks for joining. Thank you, Scott.
Thank you, Raj. Nice to see you again. See you.
Cheers.